Happy Monday. I'm Lauren Simonetti.
And good morning, everybody. I'm Cheryl Casoni. Of course, the big news, the markets this morning.
Yeah, the tweets that rocked global markets, and a stern warning is coming for China from President Trump. This is what he tweeted over the weekend. This is why there is a sell-off. For 10 months, China has been paying tariffs to the USA of 25% on $50 billion of high tech and 10% on $200 billion of other goods. These payments are partially responsible for our great economic results. The 10% will go up to 25% on Friday. $325 billion of additional goods sent to the U.S. by China remain untaxed, but will be shortly at a rate of 25%. The tariffs paid to the USA have had little impact on product cost, mostly borne by China. The trade deal with China continues, but too slowly as they attempt to renegotiate. No.
Well, also, White House economic advisor Larry Kudlow came on to Fox News Channel, and he clarified the president's remarks. Listen.
The president is, I think, issuing a warning here. We've made great progress, and we want to be optimistic. But if it doesn't work out, then I think what the president is saying in today's tweet is that we will continue the tariffs. We believe that's in the best interest of the United States, and China has got to end its unfair, non-reciprocal trading system. They're breaking the laws. We hope they'll come around with this deal.
Meanwhile, China maintaining that a trade delegation is preparing to come to the U.S. to continue talks, but Chinese Vice Premier Liu's trip is still in question right now. Let's bring in Heritage Foundation trade economist Tori Whiting. Tori, good morning.
Good morning, Cheryl.
What do you make of this new threat from the president of jumping those tariffs to 25% by Friday and additional tariffs on new goods? And we've never seen these tariffs before. This is the president of the United States, Tori.
Well, here's the thing, Cheryl. I think that these new proposed tariffs or threatened tariffs are completely counterproductive to what the administration is trying to do vis-a-vis China. There have been gains, it seems like, in the negotiations, and we really need to be focusing on eliminating the tariffs that have been imposed thus far, not increasing taxes on the American people. And the things that could see taxes under this threat are, Apple products and clothing and regular consumer goods. So this would have a direct impact on the American people.
Well, also, I was looking at some of the companies that have maximum exposure, sales exposure to China. Wynn Resorts, 73% revenue exposure to China. Qualcomm, Apple, 20%. So it's American companies, but also, and the Heritage Foundation has been very clear on this, this is a tax on the American consumer. But the president is taking a hardline negotiating tactic. Can we see past that to the fact that a better deal could be on the horizon with China based on the president's moves?
Well, you're absolutely correct. The Heritage Foundation has been saying for 2 years, and even more than that, for 45 years since our institution was established, that tariffs are taxes on the American people. I think that what we've seen is that the president's negotiating tactics over the last 2 years with China have not borne fruit. And so why would more of the same work?
Goldman Sachs, I want to point this out. And by the way, Apple, we should show the stock is down almost 4% on the pre-market, by the way. This is a huge stock story and a massive sell-off. We're looking at futures right now down more than 500. Goldman Sachs put out a note before the news that Chinese delegation was actually still coming. Again, the vice premier is the question mark here. They said, whether or not the delegation comes on May 8th, that's the biggest question. But they said this lowers the idea that there's going to be a successful deal. They say that all of this back and forth and this global market sell-off this morning lowers the chances of a deal. Do you agree?
Well, I'm optimistic that an agreement will still come to fruition. My fear, though, is that this sort of additional pressure from the administration will result in a watered-down agreement between the U.S. and China. We're talking about really intense negotiations that cover a wide swath of issues, and that takes time. And continued pressure by the administration just to get something on the table rather than the right deal could be counterproductive to the ultimate goal.
Yeah, again, as we're looking at this broad stock sell-off, we're looking at Qualcomm, that stock down more than 4.5%. Broadcom, Micron, AMD. These are Intel. These are all stocks we have to watch as, again, we look at the trade policy that could be in jeopardy and these talks that could be in jeopardy. Tori Whiting, thank you very much for being here, Tori. We really appreciate it, and we thank you for your time.